Thanks for clicking. China's real estate crisis continued to heat up this week as Evergrande and its investors were surprised by a $2.1 billion bank seizure.
That money is mine.
We also had a number of developers alert authorities that they would not be able to make their March 31st deadline to come clean with an audit of their books. And we also received aggregate news on the real estate market showing that prices continued to drop substantially over the past few months. Finally, and we've been waiting for this for a while, we did receive some data this week showing how much Chinese capital has been invested in Canadian real estate. So what I want to do today is go over Evergrande and the other real estate developers as the real estate crisis continues to get worse.
It's going to get worse before it gets better.
Then we'll go over the real estate data released by China, showing not only that the real estate crisis is getting worse, but also that it might be getting worse than they are letting on. And then we'll end off by looking at this data released on Canada's real estate market and the extent to which Chinese capital has been flowing into it. We'll continue to monitor China's progress, or lack thereof, during our weekly China updates. Click like and subscribe if you want to get those updates, but for now, let's get into Evergrande. We spoke last week about China's March 31st deadline for these real estate developers to come clean on their books to submit complete audited financial statements, which we expected to reveal the true state of their debts.
Well, why don't we put our cards on the table here?
Evergrande announced this week that it would not be able to make the March 31st deadline.
Oh, there's a surprise.
Yeah, Evergrande's not exactly known for making their deadlines. But Evergrande was by far not the only real estate developer to announce they'd be missing this major deadline. Shimao, which was once considered one of China's most strongest real estate developers, also said they wouldn't be making the deadline, followed closely by Kaisa and Sunac. So, multiple real estate developers are going to be missing this major deadline on the 31st, this much anticipated deadline, as investors in the world wanted to see Chinese authorities, I'm sure, wanted to see the true state of these real estate developers' books. Given that China and these real estate developers are not very well known for their transparency, and given that auditors have already resigned en masse from many of these real estate developers, missing the deadline is not a good sign. It's one thing when you don't pay your debts, but when you start avoiding the collection agencies, that's a whole nother problem, and doesn't instill confidence in your ability to pay. And the results of all this lack of transparency, all of these delayed payments were on full display this week when Evergrande had $2.1 billion seized by the banks. So clearly international investors, domestic investors, the banks are getting more and more concerned about these real estate developers' ability to pay.
Because investors now are reckoning with really what the reality is for this sort of massive sector. Once one of the most profitable trades in corporate bonds globally, of course. Now investors finding themselves in these really difficult positions, either dealing with this sort of enormous wave of defaults, a record number last year, or increasingly these sort of unfavorable terms when it comes to extending payments.
But as we've seen in the past, what happens to Evergrande eventually does trickle down to these other real estate developers that we've gone over the past few months. So the banks are starting to get nervous. They're starting to seize cash. I would expect this trend to continue, which is not going to be great for China's real estate market. And like we said, the real estate market isn't getting any better in China. We received news this week that land sales plunged almost 30% over January and February, putting significant strain on government finances. And while this 30% plunge might seem bad, and it is, the Wall Street Journal notes that it's probably even worse than China is letting on. There's a big difference between official statistics in China and what the real estate developers are saying. Developers are saying they're selling at discount prices just to get buyers through the door. And investors definitely took note this week as there was a major plunge in the stock market after it didn't look like China was going to be providing any major monetary stimulus anytime in the immediate future.
Traders were just a little bit anxious that hopefully we were going to see some sort of policy action soon.
So yeah, these real estate developers are not making their deadlines. Evergrande had $2 billion in cash frozen. The stock market plunged, and investors are getting increasingly worried that China is not going to take care of this, that China is not going to further open up the taps through either a reserve ratio requirement cut, a triple R cut, or through lower interest rates, which, from the looks of it, these investors are begging for in China. So while the real estate crisis continues in China, we actually did get some data this week showing that the amount of capital flowing from China into Canada's real estate market has increased substantially over the past 6 years. Andy Yan, director of the Urban Studies program at SFU, researched the amount of foreign capital coming into Canada's real estate market by looking at the disclosure documents of all of the banks. Yan found that of all of the foreign banks operating in Canada, lending on real estate in Canada, only the Bank of China, not to be confused with the People's Bank of China, they're China's central bank, the Bank of China, a Canadian subsidiary of a Chinese bank, only this bank was transparent enough for him to be able to glean any data on what's been going on in Canada. And Yan found a very interesting conclusion just in BC and Ontario. Well, in BC in 2015, the Bank of China loaned out $40 million. By 2021, it was at $121 million. Similar results were found in Ontario, where in 2015, the Bank of China had loaned $139 million, but by 2021, that was up to $1 billion loaned out on Canadian real estate. So while the amount of these mortgages being issued by the Bank of China is definitely not a market maker, $1 billion is a drop in the bucket in Canadian real estate.
It's nothing. What are you going to do with that?
I think what's most interesting, what's most consequential, is the increase. An increase from around $130 million in 2015 up to $1 billion 6 years later means there is an increasing amount of Chinese capital flowing into Canadian real estate. And remember, this is just one bank. The other banks that Andy Yan tried to study didn't have the proper amount of disclosure documents available for him to get that data. So this is just one bank that we're seeing this over $1 billion, probably with BC, probably about $1.2, $1.3 billion flowing into Canada's real estate. It's just one bank, and this isn't even considering any individuals that are having their capital flow into Canadian real estate as well. And I think this points to one of the biggest worries we've always had with the Chinese real estate crisis. It was either that things would get so bad in China that investors would move their money increasingly to Canada as a means of protecting their money from the downfalls of the Chinese market or from seizure from Beijing. So the worry was that they would flood the Canadian market with cheap money, with money that was able to buy up our houses. The other worry was that the money that's already in the Canadian real estate market would be withdrawn and moved to China to shore up investors' finances there. We don't have any news of this yet, but we are starting to get some more data out over how much Chinese money is in Canada and how that money really could affect our real estate market. $1 billion is not a whole lot in the aggregate of the Canadian real estate market, but it's still a fair amount, say in Toronto alone. That's still a fair amount of money.
Sometimes.
No, it's not. It's still a fair amount of money. $1 billion here, $1 billion there. After a while, it adds up to real money. But as China's real estate crisis continues to unfold, as their economy continues to deteriorate, and as this economy is more and more affected by the crisis in Ukraine, which we didn't really go over today, this was more focused on real estate, we're definitely going to see the effects here in Canada, be it through inflation, be it through a flood of money, be it through an exodus of money. One way or another, the second biggest economy in the world is going to affect us here in Canada, and we'll make sure we have updates out on that on this channel. If you want to get those updates, make sure you click like and subscribe, and thanks so much for watching.